a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Ukraine back in focus after a fractious week over Greenland. A new round of talks between the US, Ukraine and Russia set to begin in the UAE. Sealing the deal. Finally, ByteDance and TikTok shake hands to transfer parts of their US operations to American investors. And Intel plunging after giving a lackluster forecast and warning of manufacturing snags. Let's take a look at these markets because futures are pointed lower. We could be on track for a second consecutive decline for the major indices. It's been a pretty turbulent week for markets, though, I have to say. And for the year to date, we are still up 1% on both of these major indices. The Russell 2000, which has been outperforming again today, but it is still pointing lower. Let's look at bonds because, again, that's where most of the turbulence happened. And remember, it was a 4-day trading week. We had a long weekend in the US at the beginning of the week. The 30-year yield, 482. So we're seeing a little bit of calm there. Same for the 10-year yield. The 2-year yield, though, back up at 361. Not much movement today, but that is an incline since the beginning of the week. Now, I want to show you the yen because a fascinating story out of Japan today. We had a 2-big figure move in the yen at one point. Governor Ueda was pretty hawkish, but there was a dissent at the meeting, and there was much speculation that perhaps the Bank of Japan had intervened, and then a lot of pushback on that speculation that this was just a jittery market, a jittery trader, some jittery logarithmic traders. You see this huge drop here, the yen strengthening, but then giving back some of that strength, and now we're back at 157 and change again. So a very, very interesting time to be a yen trader. Right, I do want to mention that gold is also approaching $5,000, so a lot of cross currents going on in this market. Let's get to some individual movers now. Over to London and Chloe Melly. Chloe.
Good morning, Bonnie. We are talking about Intel once again today, but this time the shares are firmly in the red, down almost 14%. The outlook provided by the company disappointed investors, and it also warned that it was dealing and struggling with manufacturing problems. And so the market expected the confirmation that a big comeback was on the way for Intel, but perhaps investors have to wait just a little bit longer. Moving on, but staying within the earnings front, and Intuitive Surgical reported earnings ahead of estimates, and it is in the green this morning. And then analysts also mentioned that the outlook provided by the company was quite conservative and that there was room for upside as a result. And therefore, we are up 4% in pre-market trading this morning for that medical equipment firm. And finally, Spotify is also in the green after being upgraded by Goldman analysts, who said that the company was really well placed to benefit from this, from AI, from generative AI and the rising adoption of generative AI. And therefore, we are up 1.7% for Spotify this morning.
All right, Chloe, thank you so much. And coming up in this hour, we're going to be catching up in moments with Principals Seema, Shah. And later in the hour, Kevin Mahn of Hennion and Walsh joins. He sees another positive year for stocks. Seema Shah of Principal Asset Management then looking at the potential for a structural shift in markets, writing, quote, global investors have shown greater appetite to diversify away from US concentration risks, especially in AI leadership, and renewed geopolitical unpredictability strengthens this incentive. Recent dollar softness is consistent with this gradual global portfolio rebalancing. Seema Shah is Chief Global Strategist at Principal, and she joins us now. Seema, is this your base case, or after what we saw this week, does it recede as a possibility?
Hi, Bonnie. No, I think this is the base case. I mean, we came into 2026. We were not expecting the kind of policy volatility that we've seen in the first few weeks. But certainly this momentum behind global diversification has really been underway since 2025. But it's also really driven by fundamentals. I mean, I think there are very good reason beyond just the geopolitical risk for investors to be thinking about global diversification. I mean, just to give you one example, when we're thinking about the concentration risk in tech, and we continue to like tech, but we do agree that there is space in portfolios to think about alternatives. And, you don't only have to look at the S&P 493, you can look at other international markets, because actually the earnings growth outlook is just about as strong as you get for the S&P 493, but generally with better earnings, better.
And of course, you'll get a huge read on that in the next 2 weeks with earnings season really kicking into gear. But just one more on the tariffs and the prospect for these threats coming out of nowhere and then maybe receding and sometimes not. Stephen Englander today of SocGen out with a note saying tariffs are not the threat they used to be. Is that true, Seema? I mean, are these these threats that, I'll put tariffs on if you don't do X by X date, and then sort of not doing it, does that mean that investors take these threats less seriously?
Well, I think what we've seen is that investors have been looking at last year. We've seen this story before, and the two key things that we understand from 2025 is that firstly, the elasticity, so the impact of tariffs on growth and inflation, is considerably less than what people had been expecting. Some of that reason is because of the strength of profit margins, so corporates have been able to absorb those tariffs into their profit margins. So that's one thing. But also, of course, we have seen that tariffs have generally ended up at lower levels than initially threatened. And of course, the economy has continued to perform very well. We saw markets around the world, not just in the US, reach record highs. So I think that has been something which investors are taking into account. So when we do see some tariff news, investors remember that it's really earnings are the anchor for markets, and that has to be the focus going forward.
Seema, you talk about the 493. Are there areas there that you would try to stick to? Are there areas that are very obviously going to outperform?
So within the S&P 493, I think there's still opportunities we can see. Generally, we're looking for, of course, companies with the strong balance sheets, potentially AI beneficiaries. So from that perspective, I would talk about industrials. Some subsectors of industrials have adopted AI and starting to see the productivity gains. Financials from a cyclical perspective, given the very strong macro backdrop and the positive tailwinds from fiscal monetary policy, they continue to look good. And of course, consumer discretionary, given that we have got this tax refund coming into play in the first quarter of the year. So I think there's a lot of opportunities within the S&P 493 beyond just the general AI tech trade. And of course, lots of opportunities outside the US in different pockets of the global economy.
Now, you mentioned outside the US, many areas have outperformed. In fact, this year alone, China is already up, 5% or so versus the US up 1%. Where should we look, Seema, for places that might be still undervalued?
We've put together a global valuation map which shows how expensive markets are relative to their own history. This year, there's very, very few pockets of green. Everything is looking pretty red. But on a comparison basis, parts of Asia do look more interesting. So one of the benefits that you're seeing from Asia is that, look, if you still like the AI tech trade, which of course majority of investors do, there's a lot of AI innovation, very, very strong companies across Asia, but generally trading at slightly cheaper valuations than what you get in the US. On top of that, we also have a pretty strong fundamental outlook for China and the rest of the region. We're looking at the Chinese economy. We do believe that the property market could be approaching a bottom. We can see that stimulus measures are starting to come through. And of course, the export growth momentum continues to be very, very strong. So when you put those two things together with strong fundamentals, tech innovation, and then on top of that, the valuation attractiveness, it does become quite a compelling opportunity.
That's China. A lot of people are, mentioning Japan as well these days, Seema, which seems maybe a little odd given that the currency is fluctuating so much. And I just want to point to the fact that the currency chief has now come out and declined to say if there was intervention this morning. What is happening in Japan? Is it currently uninvestable?
No, I don't think it's currently uninvestable. I mean, there's a lot of bond volatility, which we were anticipating. Again, as an investor, when you're looking at the Japanese markets, a lot of those thematics which were in play in 25 and actually earlier are still underway in 2026. So we're thinking about the corporate reforms, the focus on return on investment. Those are all areas which continue to be strong. And then, of course, the Japanese economy is in the midst of this reflation trade. And we do think that the Bank of Japan, with this move towards hiking interest rates through this year, just makes it a slightly more attractive opportunity. Now, of course, to your point, we need to watch that bond volatility. We need to watch the currency. But we do have some confidence that the Bank of Japan, the Ministry of Finance, will be managing this fairly well. It's just a case of watching how some of those fiscal stimulus measures come through and making sure, or at least hoping that the Bank of Japan continues with their hiking schedule in order to ensure that you don't get a significant steepness of that JGB yield curve.
All right, Seema, thank you so much. We have to leave it there. That is Seema Shah of Principal Asset Management. Now to other top stories trending on the terminal this morning. First up, China deepening its scrutiny of metals, $2 billion acquisition of AI startup Mahn. Officials are investigating potential violations of rules governing cross-border currency flows, tax accounting, and overseas investments in relation to the buyout of the Chinese-founded firm. It's raising concerns that regulators will seek to alter or even unwind the deal if wrongdoing is found. CSG shares soaring in Amsterdam after the firm's debut. It saw it raise 3.3 billion euros in an initial public offering. Shares of the armoured vehicle and munitions maker opened at 32 euros per share, well above the offer price of 25 euros. It marks the largest ever IPO globally for a pure-play defence firm. And the UK's private sector posts its fastest growth in 2 years. The latest PMI numbers from S&P Global show British technology and financial firms driving that expansion. The PMI survey said an end to uncertainty after the government released its budget in November caused firms to release new projects. Coming up, the US, Ukraine and Russia sending representatives to continue talks in the United Arab Emirates today. More on that next. This is Bloomberg.
I think President Trump he really can, because he has dialogue with Putin. Not everybody has dialogue, just even dialogue. He has dialogue with Putin on the same levels. I think America is much more stronger than Russia, and you can see the result of this war. That's why I think that American army is stronger than Russian army, because of our experience with the war, with defending ourselves. And that's why I think he can do this.
No breakthrough for now. Russia says some issues remain unresolved after almost 4 hours of discussions between President Putin and US envoy Steve Witkoff and Jared Kushner. Now, the UAE is set to host the next round of negotiations between the three nations, and those kick off today. Joining us now is Bloomberg's Oliver Crook. Oliver, this idea of territory, it's not going away. Russia wants it. Ukraine doesn't want to give it up the way Russia wants it. How does this get resolved ever?
Yeah, I think this is the fundamental question, Vani, and I think that, it comes down basically to this one issue. And just to sort of remind everybody, before we went on the sort of scenic route geopolitically through Greenland, now the focus is back on Ukraine for European leaders who were assembled here last night, trying to project the light back on Ukraine, which is, of course, exactly where President Zelensky would like attention to be. So you'll remember before all this sort of spat on Greenland, there was that 20-point plan that the Europeans had amended, that the Ukrainians had given some feedback to. They gave it back to the Russians. The Russians were kind of lukewarm on that. And we understand now that we basically have solidified those security guarantees from the United States to the Ukrainians for the post-war, but that's for the day after. The day today is still dealing with that one fundamental issue, those territorial concessions, the Russians wanting all of the Donbass to basically be given to the Russians, despite the fact that they do not control it all. It is very hard to see how to break through that impasse. There have been a couple of different ideas on how to sort of maybe having a demilitarized zone there, an economic zone, a free economic zone. These are some of the issues and the ideas that the Trump administration has floated. And in those 4 hours of discussions between Steve Witkoff, Jared Kushner and Vladimir Putin, it does not seem that we got the breakthrough that we sort of wanted, that the United States wanted to see. That being said, those negotiations will continue today. They will continue tomorrow in the UAE, in Abu Dhabi. The aim here, Vani, for the Americans is to get all three of these sitting at the same table, the Ukrainians, the Russians and the Americans. Not clear if that is going to happen. It might be bilateral talks, two pairs of them that we've seen in the past, where basically the U.S. Functions as a go-between, where they have talks with the Ukrainians, talks with the Russians, and then they sort of try to bridge the gaps. So that's what we're going to be looking forward. And if we do actually get a discussion where you have all three at the table, I think that would be a significant sign of progress.
Ollie, you mentioned Greenland, and it seems to have completely receded as a threat both to Europe in terms of tariffs and maybe also in terms of security, the security of Greenland. But this was after a conversation with the NATO Secretary General, right? And it's Denmark really that has to sort of agree to this, and Greenland itself. And Denmark is saying that what's been agreed upon is some kind of framework, not an actual agreement. Do we know what's in this framework?
Yeah, so in terms of the framework, again, it's not very clear how different what is being proposed is what is already was possible for the Americans operating in Greenland. You remember there is this treaty that now we've all become familiar with from 1951 that basically gave extremely permissive rights to the United States and its military operations across Greenland. That was amended once again in the early 2000s, but effectively it gives the Americans the right to do whatever they want in Greenland as long as they let the Danes know. So they could augment the number of troops, they can open more military basis. It's not clear whether really there is going to be any substantial amendment to that. There may be some sort of cosmetic amendment to that, but basically it was already granting the United States everything that they wanted. It's not clear whether, it's because there was a massive breakthrough from Rutte, or really Rutte just provided a sort of diplomatic off-ramp for Trump, who was not getting sort of where he wanted to get in those discussions with the European allies. All of that being said, Vonnie, for European leaders who were assembled here yesterday, they really need to reckon with this new idea. I think that this week was a substantial train for European leaders. They realize that with the United States, despite the fact that this has been a year in the making, this is not a drill. They need to reappraise the transatlantic relationship, one that has got damage that I think is irreparable this week.
Yeah, absolutely, Oliver. Thank you so much. That's Bloomberg's Oliver Cook there at the European Council. Turning to technology now, and TikTok has finally sealed a deal to transfer parts of its U.S. operations to American investors in order to avoid a U.S. nationwide ban. Bloomberg's Neil Campling joins us now for more. So it got done finally, Neil. What was the finalized agreement? What will TikTok look like going forward in the United States?
So I think Bonnie, the key thing here is that there's not going to be a substantial change because one of the key investors, being Oracle, also provides the cloud services for TikTok. They're running looking after the algorithm, which is the secret source of TikTok. So in some respects, there's not going to be an enormous amount of change. I think one thing is that the investors, the US investors in this technology now, are going to be very happy, because the talked about valuation of 14 billion is an absolute steal, to be quite honest. If we look at the metrics that we have most recently, about 9 times Pinterest's usage, daily average usage per user compared to Pinterest, and Snap is about 10 times the usage of Snap. So there's a huge amount of usage on this particular platform. And at the valuation that's been talked about, we're looking really at a discount to something like a Pinterest, a fraction of what WhatsApp is worth within Meta. So it really is at 1.4 times price sales is the price people are talking about. Whereas you've got things like Pinterest on 10 times price sales and a larger market cap, which for me is astounding for what is a significant and very advanced technology.
Yeah, I hadn't realized it was at such a discount. The way you painted it, it seems like Oracle and the other investors will be very, very happy. I do want to ask you about Intel, though, because there had been a lot of enthusiasm in the days running up to its earnings. The stock had soared, and now it's extending a double-digit dip because it talked about manufacturing snags. What else did we learn from Lip-Bhutan?
I think what we learned primarily overnight is that Intel continues to suffer from its own technology missteps and remains well behind the technology curve of leaders like TSM, that is growing its sales at 30% and is 3 times the size in sales compared to Intel, which will not grow revenues this year and has 1/3 of TSM sales.
All right.
It is behind on manufacturing. It is behind on technology. And unfortunately, this is not a new thing.
Yes.
For 3 CEOs in a row now, Intel has really struggled to try and catch up the technology curve with TSM.
Down 13% right now. Neil, thank you so much. Neil Campling. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. Buying frenzy has swept across parts of the United States as forecasters warn a powerful storm will hammer 33 states across nearly 2,000 miles. Let's get to our reporter now, Joe Wirtz, who joins us from London. Joe, give us the latest.
Yeah, look, this winter storm is just incredibly widespread. There's weather warnings stretching across more than 1,800 miles of the U.S., all the way from the eastern edge of Arizona, there to New York. And in New York, look, they're looking, it could be getting more than a foot of snow, up to 16 inches in some part of New York, which would, be the biggest winter storm there since 2021. So a lot of widespread impacts. And, really, in New York, they're already preparing schools for remote learning. They've called off the legislative session. They're mobilizing thousands of sanitation workers, $700 million 700 million pounds of salt is being ready for the roads there. So really wide impacts, and could stretch across the DC corridor over there in New England, where they could see up to 10 inches of snow.
And horrifyingly, in Texas, Governor Greg Abbott has already issued emergency disaster declarations for more than 130 counties. Joe, what do we know about the potential impacts on oil, gas production, the grid?
Yeah, this could be the biggest one in Texas since the great Texas freeze in 2021. They don't think it'll be a repeat of some of the kind of widespread problems that they saw there. They've done a lot more preparation, invested more in winterization. The grid operator there, ERCOT, says they have enough power supply for the storm, although they definitely expect demand to spike. But still, like you suggested, cold weather can really disrupt oil and gas operations, especially if those pipelines or wellheads freeze. And the U.S. is a biggest exporter of LNG, and markets are have already been reacting. We've seen natural gas prices spike and really high in the next few days, and the markets are jittery.
Joe, we will be watching and trying to stay safe and warm. Joe Wirtz, thank you so much. Coming up, Kevin Mahn of Hennion and Walsh will join to talk about these markets and what a week it's been. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Ukraine back in focus after a fractious week over Greenland. A new round of talks between the US, Ukraine and Russia set to begin today in the UAE. Sealing the deal, finally. ByteDance and TikTok shake hands to transfer parts of their US operations to American investors. And Intel plunging after giving a lackluster forecast and warning of manufacturing snags. All right, we have futures pointed lower and we could be on track for a second down week in a row, though we are still up on the major indices for the year to date by about 1%. You saw the Nasdaq up about 0.75% yesterday and the S&P up more than 0.5%, so it was a green day yesterday. And we have seen some threats receding, like those tariffs on Europe, for example, over Greenland. Nevertheless, this is a jittery market. Take a look at the bond market. The 30-year yield is back down to 4.82, and the 10-year yield is not fully below the 4.20 mark, but we are getting there. The 2-year yield, though, continues to rise. And then take a look at the yen, because we had the Bank of Japan meeting, Governor Ueda avoiding signaling an early rate hike. And then there was speculation that the Bank of Japan intervened, because as you see, there was a massive two-figure drop for the yen, strengthening after the press conference. That said, many traders out there in the market and analysts saying, look, this probably wasn't intervention, it wasn't big enough and it wasn't sustained enough. And we just had the minister in control of currencies speaking in Tokyo, and he declined to say whether the Bank of Japan had intervened. So is this the beginning of an intervention? We'll keep an eye. Let's get to some individual stocks to watch, though. Over to London and Chloe Melly. Chloe.
Good morning, Bonnie. Intel shares are taking quite the hit this morning because, as you've just mentioned, they provided an outlook that disappointed investors, and it also warned that they were dealing with manufacturing problems. So maybe this marks the end of this massive rally in the shares that we have seen for Intel over the last few months, and means that investors might have to wait a little bit longer for that comeback. And we are down more than 13% for Intel. Moving on, but staying within earnings, and Intuitive Surgical is up this morning about 3.5%. After reporting earnings that came in ahead of expectations. And it also provided an outlook that some analysts are saying is quite conservative, which means that there's definitely room for upside there. And therefore, we are up this morning for that company. And finally, let's go back over to Europe, where CSG, the defense firm, is up this morning very strongly in its Amsterdam trading debut. So this is actually the largest ever IPO for a pure play defense firm. And this really strong performance shows that there is a definite enthusiasm among investors for this defense trade. And we are up more than 26% for this armored vehicle manufacturer.
Chloe Melly, thank you so much in London. Kevin Mahn of Hennion and Walsh says the bull market will celebrate its 4-year anniversary in October, but he writes, quote, there will be more short-term bouts of volatility, and certain areas of the market associated with large anticipated spending amounts are likely to provide better performance. In contrast, other areas of the market that are more overvalued are likely to experience more downside pressure. Kevin is president and CIO of Hennion and Walsh and joins us now. Kevin, are the two not the same? Where we're seeing anticipated spending, is that not where we're also seeing a little bit of overvaluation?
Yes and no. So I would say so far, I know this is only early in the year, Vonnie, but I've gotten it right. We've seen more short-term bouts of volatility. We've seen more announcements on billions of dollars of spending taking place in areas such as aerospace and defense, and of course, AI infrastructure. But we've also seen some nervousness on the part of investors, still questioning the AI bubble, if in fact it's going to burst, still worried about perhaps a tariffs tantrum round 2, as we saw earlier this week. And of course, the unknown fate of what's going to happen with the Fed chair, what that means for interest rates, and will we get 1 rate cut this year or 2 rate cuts this year? So let this all serve as a reminder that, yes, 2026 will be marked by more volatility than we saw in 2025. You're going to have to be a lot more selective to find pockets of growth opportunities. But I think defense, AI infrastructure, healthcare, notably small cap biotech, and of course, power, the all-important power solutions that the AI revolution needs and that we're going to need this week and related to this winter storm are also important.
I want to dive into a few of those sectors in a moment, but first you mentioned the potential Fed chair pick, and I'm curious, does this market react differently if it's a Rick Rieder, say, over a Kevin Hassett?
Well, I think right now Hassett has been taken out of the equation, Vonnie. As I understand it, it's between Walsh and potentially Rick Rieder. Obviously, Rick Rieder comes from Wall Street. He's a known entity. He's a very smart and capable individual. Walsh has that Federal Reserve experience, so perhaps he understands the dynamics and the inner workings of the Federal Reserve. I'm certainly not going to make a pick. Who is Kevin Mahn to suggest who they should pick as the next chair of the Federal Reserve? But I think either pick will be ultimately accepted by the markets. But certainly Rick Rieder is a more known commodity to Wall Street, whereas Kevin Walsh is a more known commodity to Federal Reserve participants and followers.
And President Trump talking about Rick Rieder being a bond guy, so that seems to be something that's important to him. And as we've seen, plenty of bond market volatility. Kevin, if we get more of that this year, does that impact how you see the stock market performing?
Yeah, again, there's going to be more and more short-term bouts of volatility, and we can list off all the potential causes of that volatility, Vonnie. The Federal Reserve, as you indicated already. How about midterm elections? How about that continuing resolution that was passed at the end of the year to fund the federal government that expires at the end of January? We also have the unknown fate of tariffs in the Supreme Court. How will they rule? Will the tariff money that's been collected already have to be returned? If so, what's the mechanism for returning that? And of course, valuations. The stock market right now is still trading rich. It's still trading above its 5- and 10-year averages, but that doesn't mean the market can't and won't move higher. You're just going to have to find those areas that provide more growth, stay a little bit more defensive, because I do believe, Vonnie, that the bull market will mark its 4-year anniversary in October of this year, but we shouldn't expect significant returns from the market as an overall or the indexes themselves following 3 consecutive years of double-digit returns.
Now, you mentioned defense stocks as one area. I can see the argument for those. You also mentioned small cap biotechs, and I would have thought that would be a much riskier play.
I look at it from this lens. Healthcare. Large cap pharmaceuticals face multiple headwinds, and it's those headwinds that create the tailwinds for small cap biotech. Look, as it stands right now, large cap pharmaceutical companies are being pressured to lower their drug prices by Washington. Perhaps it's the only area that Republicans and Democrats agree upon right now. We also know these large cap pharmaceutical companies have several large revenue producing drugs scheduled to come off patent and ultimately be subject to generic pricing. So where are they going to turn to replace all of that lost revenue potential? Well, many of these large cap pharma companies have sold off their R&D divisions. It's too costly. It takes too long. It's too litigious. So what do? They stockpile cash on their balance sheet and they sit and wait for the small cap biotech companies to do all the heavy lifting, get their innovative healthcare solutions close to the finish line, and then swoop in and acquire them. I think the pace of M&A activity increases. But to your point, Vonnie, you don't just want to pick 1 or 2 small cap biotech names. Very volatile. Build a portfolio of, we believe, at least 20 to 30 different small cap biotech names that have a higher likelihood of being taken over.
Wise words. I do want to ask you about President Trump's affordability push. It has, roiled certain sectors of the market ever since it started. Are you looking at anything that you think might be interesting and that might come up over the course of the next few months towards the midterms?
What I'm really looking forward to is areas such as healthcare that the president will likely focus in on leading into the midterms, as that's going to be a big campaign push for both sides. He's already made certain pronouncements as it's related to defense. He wants to increase the defense budget, I believe, in 2027 to $1.5 trillion, which would represent a 50% increase. But other areas of the market beyond that, not necessarily just related to affordability, but it's utilities. A lot of folks are concerned right now with their utility costs. And there's the NIMBY trade that's out there, not in my backyard as it relates to AI-powered data centers. We all recognize the importance of data centers, but they also drive up underlying utility costs for the residents of that surrounding area. So we need to explore alternative solutions to keep the AI revolution going while still keeping utility costs down. I think that's going to be a big, big point of emphasis.
All right, Kevin, we'll be checking in with you throughout the year on your calls. That's Kevin Mahn of Hennion and Walsh Asset Management. Thanks for joining. Coming up, no breakthroughs in Moscow. The decisions to end the war in Ukraine still up for question. That next. This is Bloomberg.
I think President Trump he really can, because he has dialogue with Putin. Not everybody has dialogue, just even dialogue. He has dialogue with Putin on the same levels. I think America is much more stronger than Russia, and you can see the result of this war. That's why I think that American army is stronger than Russian army, because of our experience with the war, with defending ourselves. And that's why I think he can do this.
Peace talks at an impasse. Russia says talks between President Putin and U.S. envoys to end the war in Ukraine resulted in no breakthroughs after almost 4 hours of discussions. The UAE set to host the next round of negotiations, and they start today. Jonathan Tamari of Bloomberg Government joins us now from Washington. So I guess at least the focus is back on Ukraine, Jonathan, after a sort of diversion to Greenland. Does it make it any more likely now that we have the Ukraine and Russia and US all in the room today that we'll see some kind of a framework of a deal, if you like?
I mean, you could hear Zelensky's comment that he is much more comfortable. He understands kind of how to relate to President Trump more, especially compared to that first meeting they had in the White House, where he's kind of speaking the president's language, praising him personally. But we've seen a lot of these kind of moments that are supposed to lead to a breakthrough that have just not in the past. And so it's unclear to see what's different here. President Putin of Russia has just been steadfast in not wanting to take a deal and wanting to continue the war. And so that continues to be the big hurdle. Obviously, there's a lot of hope that something can happen, but there doesn't, from the outside, appear to be major changes from these past meetings.
No, exactly. Look, Greenland did recede as a threat. At the same time, Denmark pointing out that we only have a framework and not any kind of an agreement, and we don't even really know what's in that framework. What exactly do we know about what happens next re Greenland?
Yeah, it sounds like there's still going to be a lot of work to do to kind of work out the details. It's not clear how much of this framework is actually that different from what already exists on the ground. And so I don't know exactly kind of what, formalities would be put in place or what kind of changes. But this is something we've seen very frequently with President Trump, where he likes to announce deals that are maybe a handshake, maybe informal agreement, and the details kind of get worked out later. So it's something to watch, but it's, at least from Washington's perspective, really lowered the temperature on something that had really concerned members of both parties.
Yeah, I mean, it was looking very iffy there for a while. Now, regarding domestic policy and so forth, President Trump now saying the Fed chair interviews are completely done. And he also spoke to reporters about his choice. Have a listen.
I'll be telling you soon. No, I have somebody that I think will be very good, but I'm not going to reveal it yet. Somebody that's very respected, very well known, and will do, I think, a very good job.
It's been the longest wait ever for this potential Fed chair pick. Jonathan, does it matter who gets picked in terms of confirmation?
I think not among the names that we're hearing so far. I think the names that have been thrown out there probably all have a similar chance of confirmation. There's not someone who's like a wild outlier in the way that some other nominees have been. But I do think that the big thing in terms of confirmation is this investigation into the Fed. There's Republicans who are saying they won't confirm anybody, no matter who it is, as long as that investigation is going on. So that, I think, is going to be the biggest question when it comes to the Senate and confirming the next pick.
Jonathan, thank you so much. That is Jonathan Tamari there of Bloomberg Government. Turning to technology now, after a years-long geopolitical and regulatory tug-of-war, TikTok and its parent ByteDance have closed a deal to stop a nationwide ban in the US on TikTok. Back with us now is Bloomberg's Neil Campling. So Neil, what were the final details that needed to be ironed out before TikTok became a US entity?
Well, I think the great thing is that China and the US have agreed terms. So in a week of huge geopolitics, this is one positive development we could certainly confirm. And I think the great thing now is that US users can go ahead and use the product. It's got a great algorithm, which is going to be in the control of the US. And the investors, I think, are going to be extremely happy with the terms, because at $14 billion, which is the valuation people are putting on this, compared to the parent company's valuation of $400 billion for 200 million users. And when the usage is something like 9 times greater than Pinterest or 6 times greater than Snap, and a valuation discount to those companies, when when the revenues are probably 10x the size, it's the investors who are really going to make hay from this transaction. But it's certainly good that that the users now can continue to use the product.
What are people saying, Neil? I mean, might they make this entity go public at some point, or are they quite happy to hold on to it as long as its valuation is so rich?
Well, I think at some point down the line, once the geopolitics have eased in a couple of years, 2-3 years time, you could potentially become an IPO, and I think you'd be looking at a multi-bagger, if you like, compared to where the current valuation is, given the dynamics of the industry and where they are. I think if you did some look at the numbers in terms of usage patterns, they are fairly similar daily usage to something like WhatsApp, for example. And I would argue that at the moment it's probably being valued at around about 1/30th the multiple of, say, that entity within Meta. So there's a huge amount of value that can be unlocked financially as well as technology in the course of the next couple of years.
That's an eye-popping discount. Now, suffering today is Intel, extending its loss. Now, we should bear in mind that it was up almost 15% this week already, but it's giving all of that back today because it talked about manufacturing snags. Why couldn't Intel perform this quarter?
Unfortunately, it's not a one-quarter thing. This has been a problem for the last 3 CEOs of this company. And I would argue that, unfortunately, for many investors in this, it's just yet more frustration. Many have described Intel as a dinosaur in terms of leading edge technology. TSM have led the advances, and Intel really have been left behind for the last 10 years. And you can see that in the financials and the metrics. And look at back in the day, Intel was the largest semiconductor company in the world. Today, Nvidia in market cap terms is 17 times larger than Intel. And I think that sums it quite nicely as to where they are on the tech curve. And Intel are continuing to struggle with that technology footprint.
Yeah, I think there was a little bit of hope after President Trump seemed to be getting involved, and that's dissipating today. Neil, thank you so much. Bloomberg's Neil Campling there. New Yorkers bracing for what is forecast to be the biggest snowstorm to hit Manhattan since 2021, and of course the wider boroughs as well. Bloomberg weather and climate reporter Joe Wirtz joins us now with the latest. Joe, what do we know about what's going to happen this weekend?
Boy, New York could be in store for more than a foot of snow. It's up to 16 inches there in Central Park, and could be a real test for the city operations and New York's new mayor. Schools are already preparing to be shut down and going to remote learning. They've mobilized thousands of crews to ready transportation links and hundreds of millions of pounds of salt to keep those roads ice free. And really, this winter storm stretching across the U.S. 1,800 miles of alerts, weather alerts across the country. And what makes this significant is just how many pressure points this storm could hit at once: power grids, energy markets, transportation, and it's just making governments and markets, putting them on edge, and they're watching it really, really closely.
And it's not just New York, of course, as you say, thousands of miles essentially in the United States are going to be affected.
Right.
And Greg Abbott in Texas has issued an emergency disaster declaration for more than 130 counties. What might be the impact on, say, oil and gas production, the electric grid?
Right. I mean, some of these snow figures are, eye-popping in Central Park, but really forecasters are stressing some of the biggest impacts could come from ice, and that could certainly impact Texas. You might remember the Great Texas Freeze a few years ago in 2021. This could be the largest storm since then. Officials don't think it'll be a repeat of some of the problems they saw during that storm. They've, hardened and winterized some of the infrastructure a little bit better since then, also added some battery and solar storage, and they think they have enough power to meet the demand needs down there. But, cold weather, ice can certainly disrupt oil and gas operations. Texas is a major oil and gas state, and the U.S. is a major exporter of LNG. And markets have been really reacting to this. We've seen prices jump 75% over the last few days as traders are pricing in potential tighter supply. That rally broke today as traders exited some short positions, but. Markets are very jittery, both watching this cold and also, it comes at a time when there's a lot happening geopolitically that are moving markets as well.
Yeah, that gas back below $5 for the front month contract. So we also have the potential for, work to be disrupted from data centers, just internet connections and so on. We haven't had this before, have we, Joe?
It's we saw U.S. officials, federal officials, call for backup power to be made available by reach out to grid operators, and that includes data centers, which is a new thing. Data centers a lot of times have their own power generation, and they told everybody, grid operators everywhere, including data centers, to be ready to make that power available if needed across the grid. So this is a big deal, and it comes at a time when there's big demand needs, and even more with the expected uptick in heating demand from the storm.
Yeah, absolutely. Well, we hope everybody stays safe. Joe, thank you so much. That is Bloomberg's Joe Wirtz there for us. Coming up, we're going to get you set up for your Friday trading day. This is Bloomberg. Now a look at what's ahead. Today we get PMIs at 9:45 Eastern. Fresh data as well. It's all January data now. Schlumberger, or SLB, now reporting earnings before the opening bell. And ahead of the Fed decision and tech earnings next week, we will be watching what bond markets do. Now let's take a look at some pre-market movers. Intel dropping like a stone after giving a cautious outlook, disappointing investors and warning of manufacturing difficulties. Intuitive Surgical, though, beat estimates, and that's being rewarded. And Capital One Financial, well, it's down 2.8%. It acquired Brex, the fintech company. The CEO also pointing out that a 10% credit card cap could threaten recession. Let's take a look at your macro picture this Friday. So futures are pointed lower even after some threats receded. We have the dollar index roughly unchanged and the 10-year yield crawling ever so slowly back down to that safety blanket of 420. That's it for Bloomberg Brief.